Today's sales idea, adding key executive coverage. Hi everyone, I'm Steve Savant, host of the daily talk show, Let's Get Down to Business.
And I'm Don Prenz, Senior Advisor to Insmark.
Today we're talking about key executive benefits, but I have to say this is a little different than I'm really used to, Don. Explain this, what I call unique scenario.
One of the things that we realized is that when you're dealing with a client that owns a business, it's kind of a different situation when you're doing wealth planning. And the reason is because the business is typically their largest asset, or certainly might be, and it's their main source of income in most cases. So we have a product called the Insmark Business Valuator. And what it does is it helps you value the business. It's powered by a company called Biz Equity, which is the largest company in the world that does business valuations. And it ties into millions of other businesses and comps, and it really is a revolutionary new service that allows you to accurately value the business of a client. And then the interesting thing is, once you know the value of the business, then you can plug that as an asset into Wealthy and Wise and do comprehensive wealth planning. In this particular case, we have a client, a husband and wife, George and Marie, and they own a business. And what's interesting in this situation is that we went through the Insmark Business Valuator, we plugged in their certain kind of business and their revenues and their income statement, and it came back and told us their business today is worth $5 million. However, what it also told us, because you can do a lot of what if with the Insmark Business Valuator to see what the business is worth, it also told us that if George dies, because he's pretty important to the business would only be worth about $4 million. So if George dies today, that business is worth $1 million less, and Marie would lose the income he gets from the business because he wouldn't be working there. So she'd not only lose $1 million in business value, she'd also lose about $1 million in income if he were to die today. So what we wanted to know in this particular case is how can we indemnify against that $2 million loss, $1 million of the business and $1 million of income, and at the same time do an overall wealth analysis with Wealthy and Wise and look out in the future on when they want to sell the business in 5 years and the retirement income they want. And we wanted to look and see how can we solve this problem.
Well, you just walk through our 3 points that we have to address. And how do I do that? Because I have 2 issues, if I heard you correctly.
Right.
We have one for the valuation of the business. If he died, there's $1 million there.
Yep.
But then she also loses income, and they're valuing that as $1 million loss of income as well.
That's right.
So walk me through the graph that says, here's another, and by the way, again, this is a unique way. We're not doing buy-sell. We're not doing anything that's traditional key man. This is a little different. This is adding an executive benefit, in my mind, that's a little off the beaten path.
Yeah, what we're doing that's a little bit different is this life insurance is not owned by the business. We're having the life insurance owned by George and Marie. And so what we ended up doing, we bought a $2 million life insurance policy, but we max funded it over 5 years. Again, they have the cash flow to buy whatever they want. They don't have to buy term insurance. And the reason we did that is because we wanted to do a comprehensive wealth analysis, and by max funding the policy, we think we can actually improve their net worth if they live and still fund the $2 million of life insurance in case George dies to indemnify the risk against the loss of the value of the business. So here's the basic plan. This is our illustration of values graph from the Insmark software. And as you can see that the death benefit starts at $2 million, and we start taking cash values and loans, and you can kind of see the basic nuts and bolts of the policy. Here's your net premiums. So now, given that they would transfer, I think the premium was $180,000 a year for 5 years, let's look at how that impacts their net worth over time. So if we can go to the next Wealthy and Wise summary graph. So what we wanted to show was strategy 3 shows where they are without buying the cash value life insurance. Strategy 4 is their net worth if they buy the life insurance and do the 5-pay max fund. And what you can see is that the cash coming out of both of their retirement plans is the same. They take $18 million out of their assets over their lifetime. And by switching some of their assets into the cash value life insurance, their net worth actually increases to $11.6 million versus about $10 million if they don't buy the life insurance. The big benefit, in addition to their net worth getting better if they live, they have $2 million of life insurance to indemnify the risk to the business if George were to die.
So if I understood you correct, what we've done is we indemnified the exposure that they had during that 5-year period, but we've also taken care of her income needs with the other $1 million, and on top of it, incredibly, we've actually increased their net worth statement with the same amount of money within their asset base. Today's sales idea is brought to you by Ash Brokerage, the practice enhancement company.
And by Insmark, the most widely used software when it comes to strategies and presentations using cash value life insurance.